All right, so our next presenter is Silvercorp Metals. Silvercorp is a silver-focused Canadian mining company with operations in China, and the company is also advancing its Domo and Condor projects in Ecuador and recently acquired 2 development-stage gold assets in Kyrgyzstan. And speaking on behalf of the company today is Silvercorp's president, Lon Shaver.
Thanks, Kevin. First off, I'd like to thank BMO again for the opportunity to present to you today. As mentioned, my name is Lon Shaver. I'm president of Silvercorp Metals. Before I get going, I'd just like to highlight I will be making some forward-looking statements. Now, kicking off with this slide, really, the title is pretty self-explanatory. Profitable silver mines in China to support growth and diversification. Our Ying and GC operating mines in China since 2006 have delivered over 100 million ounces of silver, 1.5 billion pounds of lead and zinc, generated profits over 600 million, which has allowed the company to return to shareholders over 235 million through dividends and buybacks. But it's also left us in a very strong financial position. We had 463 million in cash as of December, and then investments in other public companies of approximately 315 million, with the majority of that being our 28% stake in New Pacific, which gives us our exposure, you can see at the bottom of the map there, to 2 silver projects under development in Bolivia. But as far as projects we're developing ourselves, the Domo Copper Gold Project is in construction in Ecuador. We're building the Quanping silver mine in China, which will be a satellite to our Ying operation. And we've recently acquired the Tulkubash and Kiziltash gold development projects with significant gold resources in Kyrgyzstan. On top of that, the Condor Gold Project in Ecuador is proving up nicely to be an underground operation, and we're looking to permit some tunnels to go forward with that. And lastly, we have the BYP gold mine in China, which is currently under a permitting process. So why consider Silvercorp as an addition to your portfolio? We run best-in-class operations. We're looking to produce 7.5 million ounces of silver equivalent. That's just silver and gold, on top of 90 million pounds of lead and zinc per year in China. Our trailing 12-month all-in sustaining cost was less than $14 an ounce. That's net of byproduct credits. And our Ying production is increasing with a mine optimization program and the addition of that Quanping project that I mentioned. Our sizable resource base justifies an extension beyond both Ying and GC's existing 15-year reserve life. We've added a diversified growth pipeline. Domo will add to revenues and cash flows starting in 2027. The Tulkubash oxide project is expected to begin construction later in this year and could contribute in excess of 100,000 ounces a year of gold starting in late 27 or early 28. And then that would lead into the Kiziltash sulfide project, which could add over 200,000 ounces of gold starting in 2031. Condor, as I mentioned, is demonstrating upside as a low-cost underground gold project, and I'll touch on that a bit more later. At the same time, we offer compelling value. We have exceptional margins, return on equity, and leverage to silver, but we're trading at a discount to our peers on multiple metrics, including trading at a 0.8 price to consensus NAV. We have buy and outperform recommendations from most of the analysts that are covering us, and we have a very liquid stock that trades approximately 115 million US dollars worth of trading daily across the US and Canada exchanges. So looking at Ying, we recently expanded our milling capacity to 4,000 tons per day. This is to accommodate growth in ore production from the 7 mines that we operate in the district. Our 15-year mine life has benefited from extensive exploration since we began operations, over 2.6 million meters drilled, and this year we've budgeted 250,000 meters of drilling. We're undergoing a program to optimize our mines to grow production, and this involves a transition to more mechanized mining, which has been underway. This year we have been spending $25 million to enhance ramp access to improve the flow of people and equipment and ore. and we're looking longer term to put a trackless system in to replace the shafts. The Quanping Mine Development Program, which is 33 kilometers to the north, has begun construction. We've allocated $4 million to that in 2026, our current year, ending March. And this has been focused on ramp development and exploration tunneling. We're expecting to see some development ore hit the Ying mill this summer. And then we're looking to get up to 100,000 and then eventually 200,000 tons of ore per year from this satellite operation. These photos show some of the recent developments. Upper left is the mill expansion that we completed in 2024. Upper right is the new tailings facility, also completed in 2024. More recently, we transitioned all of our ore haul trucks from diesel to EVs, which is providing some cost benefit and, of course, reducing our environmental footprint. And in the bottom right, you can see the development underway at Quanping. Switching to El Domo, the copper gold project in Ecuador, this really would be Ecuador's next and third commercial scale mine. We recently updated our CapEx estimate to $284 million, and we spent $45 million to date as of the end of December. This will be funded by cash on hand and $175 million contribution from Wheaton, of which we received $44 million in October. In 2025, the focus was on site preparation, stripping overburden, constructing and improving roads, looking at water management, diversion ditches, and starting construction of the tailings facility. But we also improved the flow sheet, which we think can bump up the copper and gold recoveries by 5.4% and 6.2% respectively. We started ordering long lead time equipment, and very importantly, we just completed in the fall a construction of a 600-person camp. We're in the midst of awarding the mining contract for mine construction and operation to a contractor active in Ecuador, CRCC 19, and we're looking to commission the mine and the mill in July of 2027. This shows a site photo showing that camp that was constructed and completed in the fall. And here's another site picture looking at the camp from the other side, but off to the left you can see the beginnings of the tailings facility, and in the upper right is the process plant area with the covered ore shed that we're putting in place. Switching to the Condor Gold Project, which we're hopeful will be our second mine in Ecuador. In 2025, we updated the resource estimate to look at 2 ore bodies from an underground perspective, and we came up with a resource of 2.5 million ounces of gold. In December, we announced the results of a PEA. That would be a 5,000 ton per day underground mine, producing for 13 years at 113,000 ounces of gold per year, at a very attractive all-in sustaining cost of just over $1,200. At that modest gold price, you can see very attractive returns, and of course at spot, that NPV goes well over $1 billion. And this is in part due to a very modest CapEx under $300 million, because the project really benefits from the ability to access the ore zones with tunnels driven in from the side of the hill. A third of the ore body is above those haulage tunnels, and we expect to see very good ground conditions. The game plan at Condor going forward is we're expecting to get permits to be able to start construction of what we'll call exploration tunnels in 2026. This would take about a year to complete. When they're done, we'll be able to go in and to set up drill stations to drill off that resource and tighter spacing. But also in parallel, we look to work on getting the permits to build the surface facilities, namely the process plant and the tailings dam, so that we could see this potentially contributing to production in 2029. In January, we announced the Kyrgyzstan transaction, where we paid $92 million to a subsidiary of a London company to acquire their sub that had basically a mining permit containing 2 projects that are quite advanced, as well as an exploration permit with some additional deposits. When we convert this to a joint venture company, we will be owning 70% and be operator, and Kyrgyzstan, the state-owned gold company, will own a 30% free carried interest. We'll pay the government another $60 million upon extension of the mine life from 2032 to 2062. The way that we see these projects developing is first starting with phase one, development of Tulkubash, which would be $150 million in capex, produce over 100,000 ounces a year for 3 to 4 years. The opportunity is that we could extend that life by 2 or maybe even double it with a satellite deposit. We could start construction in 2026 and see production and cash flow starting late 27 or early 28. That cash flow would then allow us to move into phase 2 and build Kyrgyzstan, a bigger project, $400 million in capex, but also much longer life, 18 years at roughly 190 to 230,000 ounces of gold per year. I won't spend too much time on New Pacific as they are here and presenting, but our 28% stake is a key investment for us. 2 great projects with the potential to deliver 20 million ounces of silver per year, and you can see those attractive economics at very modest silver prices. The government in Bolivia has certainly improved and is taking the right steps. And yesterday the company announced a community agreement with the community at Kyrgyzstan, which will allow them to move forward. Looking at the company, we have a very healthy reserve and resource base across all categories in China, looking at it from a silver equivalent basis. The addition of Ecuador and Kyrgyzstan has taken us to 1.2 billion ounces of silver equivalent, and that's ignoring any of the base metal components. Similarly, the addition of these projects take us from a revenue standpoint in our recent year coming up, 470 million. Addition of El Domo to 769. We can see the addition of Kyrgyzstan bring us over $1 billion in revenue with a large gold component, and adding Kyrgyzstan at the end would take us to 1.7 billion. In the meantime, our existing assets definitely showing leverage to silver prices with strong adjusted net income on a quarterly basis and free cash flow. But despite that, we still trade at a discounted multiple, and as we continue to build out these growth assets, we think we can achieve the higher multiples that our peers are achieving, given that they've got broader and more diversified platforms. Quick snapshot of ownership, very widely held. You can see amongst the names, very familiar groups in terms of ETFs, but also some long onlys. And in the last year, we added 2 new groups that are now researching us. Cantor and ATB Cormark picked up coverage in the fall, and we're optimistic we can add a few more names to coverage this year. Quickly on catalysts, moving ahead with El Domo construction, complete studies to move ahead with Tulkubash and begin construction this year, continue to increase production at Ying, permit and develop the tunnels to move into Condor so we can move ahead with exploration and mine development. And of course, New Pacific, excellent catalysts on the horizon. And one last thing that's not on this, but that we are looking to do, is to seek a listing on the Hong Kong Exchange to open us up to another audience that is likely to be very open to the jurisdictions that we operate in. So with that, I'll wrap up. Thank you, and just leave you with a snapshot of the number 2 mill at the Ying facility.
That takes us to the end of our time slot. Thanks a lot for joining us, Lon.
Thank you, Kevin.